Hello students, how are you all? I hope you are doing well. The previous lectures we have started a new chapter that is journal entries. In this chapter we have discussed about the objective of business, double entry system and concept of an account. Okay, with some example, don't forget that family man example and source document. I have seen the images of source document also. Next, right, we have also understood how the accounts are identified. The accounts involved in the transaction are identified. This is also we have discussed. And after that, whether the identified account is debited or credited, for that we have to first analyze the transaction. For that we have two approaches: accounting equation approach and traditional approach. We are discussing about traditional approach. Under the traditional approach, all the accounts are classified into or categorized into personal account, real account, and nominal account. After that, we discussed personal account again classified into natural person, artificial person, and representative personal account. Next, impersonal accounts are classified into real account and nominal account. Now, after that, we have discussed their rules. So, rules of account is nothing but what? Whether the identified account is a personal account, then the account is debited or credited. For that, what you have to see whether the particular person is receiver of any benefit from the business or giver of any benefit to the business. If he is a receiver, then his account is debit. If he is the giver, his account is credit. Next one, real account. In when if the identified account is a real account, then we have to check whether any asset comes into the business or any asset goes out from the business. If any asset comes into business, then that account is debited. If any asset goes out from the business, then that account is credited. After that, we have discussed nominal account. Nominal account, if the identified account is expense or loss, then that account is debit. If the identified account is income or gain, then that account is credit. Okay, students. After that, we have discussed the we steps we have to check before recording any transaction in the books of accounts, that is journal. First, we have to identify whether which transactions we have to record in the books of accounts. After that, each transaction has two aspects. No? One aspect debit and another aspect credit. So for that, we have to first identify accounts involved in the transaction. After identifying with how many accounts involved in the transaction, next step is identify the nature of account. Nature of account. After that, recall the golden rules of accounting. Recall the golden rules of accounting. Once we classify which account debit and which account credit, the next immediate step is recording them in the journal. Recording them in the journal. Yes or no, students? Yes. Now we start our new concept, that is journal concept. Journal concept. In this concept, what we learn is how the transaction is recorded in the book. How the transaction is recorded in the book in a systematic order, not as you like or as I like. Everybody should record in the same manner. That's what we learn here. Now look at, for that I'm taking one example. Look at, first take one example. You people also, it is better to write. Purchased goods for cash. Purchased goods for cash, rupees 10,000. Purchased goods for cash, rupees 10,000. First of all, tell me, is it transaction or not? Yes, sir, it is a transaction. Now, next step is what? Identify the accounts involved in the transaction. Identify the accounts involved in the transaction. Tell me, what is the receiving aspect? Goods. Whenever we receive goods, then what is the account name we use? Purchases. What is the account name we use? Purchases account. Purchases account. Immediately, next account name. That means, what is the giving aspect? Receiving aspect, goods. Then what is the giving aspect? We are giving cash, sir. We are giving cash. Yes, sir. No, students. Yes, sir. Simple. Next step is what? identifying the nature of account. Identifying the nature of account means whether it is personal account, real account, or nominal account. Now tell me, purchases means goods purchased. For what purpose these goods are purchased? For resale purpose. For what purpose these goods are purchased? For resale purpose. So this purchase of goods becomes expense for us. This purchase of goods becomes expense for us. So all expenses comes under which category of account? That is nominal account. Which category of account? Nominal account. Yes or no, students? Nominal account. Next, cash means asset. Cash is asset. Asset comes under which category of account? Real account. Real account. Is it clear, students? So we have identified the accounts involved less nature of its account. Nature of account. Next step, recall the debit credit rules. Recall the debit credit rules. Nominal account rule is what? Debit all expenses and losses. Credit all incomes and gains. Now come to real account. What is the rule of real account? Debit what asset comes in. Credit what asset goes out. This is the rules. Okay now. Now based on these rules, now you people tell me whether purchase account is debit or credit. Debit. Purchase account is debit. Why? Because it is expense na, debit. Cash account is credit. Why it is credit? Because it is asset. Because it is asset, cash goes out. How much amount of goods purchased? 10,000, sir. And how much cash you are paying? 10,000, sir. So these two must be equal at any point of time. These two must be equal at any point of time. That's why we say it, debit is always equal to credit. Receiving aspect is always equal to giving aspect. Receiving aspect is always equal to giving aspect. Yes or no, students? Yes, sir. Fine. Understood this. Now, how this information is recorded in the journal? How this information is recorded in the journal? That we need to understand. Till here, is it clear, students? Yes. Now look at next. Now we are going to record this transaction in a book called journal. A book called journal. So in this book, we record all the transactions first. That means first, whatever the transaction happened in the business, we make a record of it. Sir, how do we record it? For that, first we try to understand the format of journal. We try to understand the format of journal. Look at the format of journal, students. Look at the format of journal first. It has 5 columns. Has 5 columns. So journal format is nothing but 5 column format. 5 column format. Do remember. You people also try to draw. Yeah. First and foremost column is date. We write that the date in the first column. Next one. Last 2 columns are meant for writing amount. Next, we draw a small column which is meant for ledger folio that we discuss later. Ledger folio that we discuss later. Right? Now look at these are the five columns. Student. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. These are the five columns first we have to draw. First column, we should mention the date of transaction. On which date this transaction happened, that we need to write. Second column, we need to write about the particulars about the transaction, nothing but which account debit, which account credit. Next one, here we write LF, means ledger folio. This I will discuss at the time of ledger chapter, not now. Ledger folio. Is it clear, students? Fourth one, we should write the debit amount. Next one, credit amount. Debit amount, credit amount. This is the format of journal. Now you people just pause the video and try to draw the format. Tell me, journal is a book in which we record the transactions. We record the transactions. Now, what is the journal format? 5 column format. First column, date column. Next, particulars column. Next one, ledger folio column. Regarding this ledger folio, I will discuss later. Next one, debit column, debit amount column, credit amount column. Is it clear, students? Right. Now, let us say this transaction is happened on 2024 January 1st. Transaction happened on 2024 January 1st. Is it clear? Now, first we have to write the date. Do remember, the date may be written as first date, January month, 2025. Here we will take 2025. Okay, 2025 January 1st. The date may be written like this also, or the date may be written like this also, 1/1/2025, or the date may be written like this. First we write the year. First we write the year. After that we write the month. Next we write the date. Observe carefully. Sir, which one is preferable, sir? Generally we prefer the third one. First we write the year. After that we write the month. Next to that we write the date. Third one we prefer. Is it clear, students? Now look at. Observe. 2025 January 1st. On this date the transaction happened. Okay. So I have written the date of transaction in the date column. Next, immediately go to particulars column. Okay, sir. Start writing with the account which is debited first. In our transaction, which account is debit? Purchases account is debit. Now you also go to journal. First write down purchases account like this. Purchases account. To indicate that this purchase account is debited, to the extreme edge of the same line, we just write the two words DR, debit. Now how do we read this? Purchases account debit. Now purchases account debit, how much? 10,000 rupees. Now go to the debit column and immediately write down 10,000 debit. Purchase account debit 10,000 over. Next, come to the next line. Come to the next line. Write down what is the next account credit? Cash account. Look at cash account. Cash account credited now. To indicate this, we have to write CR. We have to write CR. Cash account credit. How much amount? Same amount. So write down in the immediate next column, credit column. Is it clear? But observe the entry. Observe the entry. Purchase account debit, cash account credit. So this type of presentation will get some confusions. Why? Sometimes in the place of DR, we may write CR. Observe students. So to avoid this confusion, what we do now is instead of writing like this, what we do is in the next column, leave just some space and start with the word TO2. Start with the word TO2. Next, write down the account which is credited, cash account. Observe now. Now, how to read this entry? How to read this entry? 2025. Start from the date. 2025 January 1st. Purchases account debit 10,000 to cash account 10,000. This is how we record the entry. Is it clear, students? If you can understand this one, remaining transactions are easy. Now, next. This is the entry. See, accounting is a language of business. Accounting is a language of business. Now, now to explain this entry, why we have written this entry? Because of this transaction. Now, what we do is in the journal format itself, we simply write a brief explanation about the transaction. A brief explanation about the transaction. Now, this is the transaction purchased goods for cash 10,000. For this, we have written the entry. What I'll do is simply I will explain the entry in a brief manner. Means goods purchased. So here first I will start with the word being goods purchased. That's it. Why did you write this entry? Why did you write this entry? Because we have purchased goods. That's why I have written entry to indicate that here we are giving a brief explanation. Here you may use the word being or you may ignore the word being also. Simply you can write goods purchased. Earlier we used to write the word being. Nowadays, modern accountants they are not using the word being. But in the examination, it is preferable to write the word being. This is how we record the entry. After completion of the entry, try to draw a line in the particulars column. Try to draw a line in the particulars column. Sir, why should we draw the line? Why? Because this is one transaction. After completion of one transaction, we record the other transaction. Yes or no? To differentiate between two transactions, we are drawing a line. Look at this. So this is how we record the transaction in the books of accounts. Tell me, first we write the date of transaction. Next one, we come to particulars column, start with debit account, purchases account. To indicate purchase account is debited, to go to the extreme edge, same line, extreme edge, write down the word DR. And in the debit column, write down 10,000. Next one, come to below the line, leave some space and start with the word TO2. See, the moment you leave some space and you are starting with the word TO2, it is nothing but this account is credited. Is impliedly it is credited. So cash account in the credit column write down 10,000. The credit column write down 10,000. That's it. Now, to explain this entry, we are giving a brief explanation that is called narration. Brief explanation about the entry is nothing but narration. 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 After writing the narration, just draw a line within the particulars column. Within the particulars column, draw a line. Why we are drawing this line? To differentiate between two entries. Is this clear, students? I hope you understood this. Yes or no? So, after completion of this, now come to the concept of journal once. Look at. Now look at. As we discussed, journal is a book. Journal is a book in which We record the transactions as and when they happened in the business or occurred in the business. So for the first time we are recording the transaction in this book journal now. That's why this book is called Book of Original Entry, of Original Entry, or Book of Prime Entry. Yes or no, students? Yes. Now look at, the journal is a primary book. The journal is a primary book in which all business transactions are recorded in chronological order. See, what is the meaning of chronological order? Means here transactions we record in the journal on daily basis, timely basis. Suppose today is 1st January 2025. Assume today whatever the transactions happened in the business, first I have to make a record. Tomorrow 2nd January 2025, tomorrow whatever the transactions happened in the business, we have to make a record. So in the journal we record the transaction on daily basis. So why should we record like this, sir? Otherwise we forget. Otherwise we forget. That's why we record the transactions in the journal by following chronological order. Is it clear, students? Yes. Now, transactions are first entered in this book to show which account should be debited and which accounts are credited. Already we have mentioned here. So, purchase account to debit, cash account to credit. Next one. It is called a book of original entry because transactions are entered in chronological order daily basis. Okay. So, it is also called subsidiary book. Other name for this is subsidiary book. Next important, the word journal is derived from the French word jour. French word jour. What it means? It means a day. Jour means a day. So in the journal, we record the transactions on daily basis. That's why this we have given a name for this book, that is journal book. Is it clear, students? Yes. Next one, chronological order. Already we discussed. Now journalizing. Journalizing is the word which we use for process. See, in the journal, we have followed the process now. What is that process? We have written heading and we have drawn 5 columns, date, particulars, ledger folio, debit amount, credit amount, and we have started recording the transaction from the date column onwards. First, we have written date, next, we have written debit account, credit account, debit amount, credit amount, after that, narration. This is a process, step by step process, and this process is technically called as journalizing process. This process is technically called as journalizing, but we are recording the transactions in the books. Is it clear, students? Next one, types of journal. We have different types of journals, students. This concept now we discuss at the time of subsidiary books. We have fourth chapter subsidiary books. There we discuss the concept types of journal. At present, do remember there are two types of journal. One is general journal, another one is specialized journal. This concept we discuss at the time of subsidiary books. Is it clear, students? Look at the next concept, journalizing and its process. Already we have discussed what is journalizing and what is its process. Next, come to format of journal. Already we understood the format of journal na, date, particulars, LF, debit column and credit column. So here I have given explanation to each column numbered. So each column is numbered na, the same numbers we have followed here. So you can just go through this process once again. Is it clear, students? Now just pause the video and go through this journal format. Read one by one step and look at this example. Read one by one step and look at this example. You can understand the journalizing process. Is it clear, students? So once you understand how the transactions are recorded in the journal, next step is what? Whatever the transaction happened in the business. Do remember, students, this step is very, very important. Recording the transaction in journal is very, very important. Why? Because our accounting work, our preparation of profit and loss account, balance sheet depends on how great you have recorded the transaction, how good you maintain the books of accounts. That is very, very important. Yes or no, students? Yes. Now look at. So now pause the video. Try to read this example, these points, and relate these points to that example. Make it fast. I hope you have completed, students. Yes. Now come to the next concept, simple entry versus compound entry. Before discussion of this concept, let us try to solve a simple problem. Let us try to solve a simple problem first. Now, for that, you people come to your practice book. Come to your practice book once. Practice book or question bank, whatever the name you call. Okay. Now here, see, as I have already discussed in our practice book, we will cover all ICAI sources. All ICAI sources means study material problems, RTP problems, MTP problems, and previous exam question papers. So here what we discuss initially in the class, in the regular classes, we discuss study material problems. Study material consists of illustration problems. Here I have mentioned to look at illustration. All the illustrations of ICAI we try to solve. After that, practice questions. After that, practice questions. ICAI also gives practice questions to you to solve on your own first. Anyway, you get the answer. Okay. Now, after that, I have given some more problems for additional practice. Some more problems for additional practice to remember, students. Is it clear? Now, two people just come to problem number 13. Problem number 13. Because ICAI has given initial problems now based on the accounting equation approach problems. Accounting equation approach problems. And in some problems, they have mixed two concepts, accounting equation approach plus traditional approach. They have mixed these two concepts. So that's why I have kept those problems pending. Now, first, to understand the basic concept of journal, look at problem number 13. Problem number 13. Observe. First, you people just go through the problems. Take a pass and go through the transaction once. Here, make it fast. Yes, I hope you have completed the reading the problem. Now look at one by one transaction first. Pass journal entries for the following transactions. So identify how many transactions we have. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 transactions we have. First, identify whether all these transactions are recorded in the books of accounts. Yes, sir, we record all these transactions in the books of accounts as these are measured in terms of money. And left side first column is nothing but date of transaction. Now, what is our step? As this is the first problem, what I do is we read the transaction first. Next step, we identify the accounts. We identify the accounts. Next, we identify the nature of account on written. First, we write each and everything. After that, which account is debit and which account is credit, amount also. Once this classification, this analysis is completed, after completion of this analysis, what we do is we record the transactions in journal. I hope you understood. After completion of the analysis part, then we go to journal. Is it clear, students? So be ready for this. First one, read. Amar started business with a capital 4 lakhs. So for each transaction, identify what is receiving aspect and what is giving aspect. If we are not receiving anything, then immediately think that who is the receiver. Next, we are not giving anything, then next question, who is the giver? If we are not giving anything, then the immediate next question is what? Who is the giver? Yes or no, students? Yes, sir. Now tell me here. Now tell me here. First one. First one. Tell me. How many accounts involved? Identify. Receiving aspect is what? Cash. Receiving aspect is what? Cash. So that cash account. Receiving aspect is cash. So that we write a cash account first. We write cash account first. This is the receiving aspect. Cash. And what is the giving aspect? At present, we are not giving anything. Then who is the giver? Amar. Who is Amar? Owner of the business. Who is Amar? Owner of the business. Yes or no? So, owner, whatever the owner gives to the business, we record it as capital. Whatever the owner gives anything to the business, we record it as capital. Do remember, students. Now, capital. Next one, immediate capital. Yes or no, students? Yes. Next question is what? Next question is what? Nature of account. Next question is what? Nature of account. Nature of account. Tell me, cash account nature is what? Nature of account means whether it is real, nominal, or personal. Okay. Now, tell me cash account nature. Real account, sir. Very good. Cash account nature is real account. Real account. What about capital? Capital represents proprietor na. So who is proprietor? Person. So capital account is representative personal account. So personal account. Personal account. Now next step is what? Whether it is debited or credited. Whether it is debit or credit. Tell me students, whether it is debit or credit. Whether it is debit or credit. Now, for this, first recall the rules of real account. What is the rule of real account? Debit what asset comes in and credit what asset goes out. Here, cash comes in or goes out, cash comes in. So that cash account is debited. Cash account is debit. How much cash comes in? 4 lakhs. How much cash comes in? 4 lakhs. And what about capital account, personal account? Na? So when it comes to personal account, identify whether this person is receiver of any benefit or giver of any benefit. Here, proprietor is giving benefit to the business. So his account is credit. His account is credit. How much? Same 4 lakhs. How much? Same 4 lakhs. Yes or no, students? Yes. So this is one transaction analysis completed. Now, what is the entry we record? Cash account debit to capital account 4 lakhs over. Cash account debit to capital account 4 lakhs over. Entry completed. Here, the only problem is identifying accounts and which account is debited. Whether this account is debit or credit. Once you have analyzed like this now, recording entry is nothing. Recording entry is nothing. Is it clear, students? Yes. Now come to second one. Second one. He purchased furniture and paid by, it is not check student, paid by cash. And paid by cash. Not check, just strike off it and write down paid by cash. How much? 25,000. Now, tell me the analysis first. Second one. Second one analysis, tell me. First, what is receiving aspect? Sir, furniture is receiving aspect, sir. Furniture is receiving aspect. Very good. Then what is giving aspect? We are purchasing furniture by paying cash na. So cash account. We are giving cash, sir. We are giving cash. Now tell me what is the nature of account? What is the nature of account? Sir, furniture is asset, sir. So real account. Furniture is asset na. So real account. Then what about cash? Sir, cash also asset. So cash also comes under real account. After identifying the nature, next step is what? Identify whether it is debited or credited. Debited or credited. For that, you have to recall the rules of accounting. Tell me, what is the real account rule? Debit what asset comes in, credit what asset goes out. Now, here furniture is debit or credit. Furniture comes in or goes out. Furniture comes in or goes out. Tell me. Furniture comes in or goes out. Furniture comes in, sir. So, furniture account is debit. Furniture account is debit. Because furniture comes in na, how much? 25,000. How much? 25,000. Now what about cash? Sir, cash is goes out, sir. Cash goes out. So credit. Cash goes out, credit. Next time onwards, whenever we purchase cash, whenever we purchase furniture, now you need not to analyze because furniture account debit, cash account credit. How much? Same amount, sir. 25,000. Same amount, 25,000. Is it clear, students? So this is what we analyze. Now look at the third one. Purchased goods 1,50,000. Purchased goods 1,50,000. Now you people tell me, first of all, whenever we purchase goods and sale of goods, first check whether this is cash transaction or credit transaction. Cash transaction or credit transaction. Now here they did not mention anything whether we paid cash or on credit. Here, here, if this transaction is on credit, compulsorily they should mention the supplier name. If this transaction is on credit, compulsorily they should mention the supplier name. Here they did not mention supplier name. At the same time, they did not mention whether cash is paid or not. In this type of situation, we assume this transaction as cash transaction. This transaction as cash transaction. Yes, sir, no, students? Yes, sir. Now tell me, what is receiving aspect? What is receiving aspect? Tell me. Tell me, students. Third one. What is receiving aspect? So receiving aspect is goods, sir. So in that case, which account we use? Purchases account. That case, we use purchases account. And what is the nature of purchases account? Already we have discussed. It is an expense. It is an expense. So it comes under nominal account. It comes under nominal account. Now recall the rule of nominal account. Debit all expenses and losses, credit all incomes and gains. So accordingly, we simply debit it. How much debit? The same amount, 1,50,000. Hope you understood, students. Next one, immediately what is giving aspect? Cash. We are giving cash. Cash already we have discussed real account. Now tell me real account rule. Debit what asset comes in, credit what asset goes out. So accordingly, it is credited. How much amount? Same, 1.5 lakh. Is it clear, students? Yes. This is how we analyze. Now, if you can understand this, you you can start doing your problem. You can analyze on your own and check whether it is correct or not later. Okay. Now, immediately next one. Freight paid to bring the purchased goods 1,000. See, we have purchased goods. Yes. To bring the goods from the place of purchase to our business, we have to pay some transportation charges. Freight is nothing but transportation charges. Freight or carriage or cartage, whatever it may be, all these are our transportation charges. These transportation charges are expense for us. So that's why next transaction, which account? Freight account. We create freight account. Because receiving aspect is what? We received goods. Already we received. But to bring those goods, we have paid freight. It is expense for us. So expense means comes under nominal account. Rule. Debit all expenses and credit all incomes and gains. Debit all expenses and losses, credit all incomes and gains. How much? 1,000 rupees. And what is giving aspect? Cash. We are giving cash. Yes or no, students? So cash is real account. Simply credit. Whenever cash goes out, simply credit. That's it. How much? See, whenever cash comes, debit. Whenever cash goes out, credit. Is it clear, students? Next one. Sold goods 1 lakh. Here also, I said already, whenever we purchase goods and sell goods, try to identify whether these are cash sales or credit sales, cash purchases or credit purchases. Is it clear, students? Now tell me, here also same. We sell goods, they have to give customer name. But here they did not mention any customer name. Same time, they did not mention whether we paid cash or not. In that case, the assumption is what? Simple. These are cash sales. These are cash sales. Now tell me, what is the analysis here? Simple analysis. What is receiving aspect? We are receiving cash. So cash account. Cash account is what? Real account. Now cash comes in or goes out? Cash comes in because we sold goods now. So debit. How much amount comes in? 1 lakh. Now what is giving aspect? We are giving goods. We are giving goods. That means sales, na? We are giving goods means it is sales, and sales is income for us. So income account, nominal account, income account comes under nominal account. Yes or no, students? So nominal account rule: debit all expenses and losses, credit all incomes and gains. So it is credit. How much? 1 lakh. Is it clear, students? Like this, we have to analyze. Next one. Purchased goods from Ankur 50,000. Now, observe, is this cash purchase or credit purchase? They said purchased goods from Ankur. Ankur is nothing but our supplier, creditor. How much amount? 50,000. 50,000. Now it is a credit transaction. It's a credit transaction. Observe. One. What is receiving aspect? Tell me. Purchases. What is receiving aspect? Purchases. So purchases account is expense account. Expense comes under nominal account. Expense comes under nominal account. Yes or no, students? Nominal account. Nominal account rule: debit expense and loss, credit incomes and gains. So accordingly, debit. How much amount? 50,000. How much amount? 50,000. Next one, giving aspect. We are not giving anything at present. Then who is the giver? Who is the giver of benefit to the business? Ankur. So we create Ankur account. Ankur is person. Ankur is person. So personal account. Personal account rule: debit the receiver, credit the giver. Here Ankur is the giver. So his account is simply credit. How much? Same 50%. Yes or no, students? Next one. Sold goods to Sukumar 25,000. Sold goods to Sukumar 25,000. Here also try to understand whether it is cash transaction or credit transaction. And we sold goods to Sukumar. Sukumar is our customer. Sukumar is our customer or debtor. And they did not mention whether this customer paid cash or not. So in this case, we have to assume this is a credit transaction. This is a credit transaction. This is a credit transaction. Now look at how do we analyze it. And what is receiving aspect? Tell me, students. We are not receiving anything. We are not receiving anything. Then who is the receiver? Sukumar is the receiver. Sukumar is the receiver because Sukumar is receiving cash now. Sorry, goods now. Now Sukumar account is personal account. Sukumar account is personal account. Personal account rule is what? Debit the receiver, credit the giver. So as he is the receiver, so his account is debit. Is it clear? How much? 25,000. How much? 25,000. And what is giving aspect? What is giving aspect? We are giving goods na. So sales. Sales are nothing but income. So means credit. Nominal account na. Nominal account rule. Debit the receiver, credit the giver. Debit the receiver, credit the giver. How much? Same. Is it clear, students? Next one. Goods returned to Ankur 1,000. Earlier we purchased goods from Ankur na. Yes. Now this time we are returning goods to Ankur. So what we do is generally whatever we have identified accounts now, purchase account, Ankur account, now they become reverse. Earlier purchase account debit, Ankur account credit. Now the same becomes reverse. Observe, the same becomes reverse. Sir, why, sir? Why they become reverse, sir? Why because now what we are receiving, we are not receiving anything. Then who is the receiver? Ankur is the receiver na. Ankur is receiver because we are returning goods to Ankur, means Ankur is receiving goods. That's why Ankur account is created. Now goods are going out from the business. Goods are going out from the business. So purchase account gets reduced. Purchase account total gets reduced. But here what we do is instead of writing purchase, we write purchase returns. Purchase returns. Observe, students. purchase returns, because our expense gets reduces now. Our expense gets reduces. So what we do is purchase returns. We use the word purchase returns account. Whenever you return the goods, don't forget to use the word purchase returns. Purchase returns. Yes or no, students? Simple remembering is, earlier whatever the accounts you debit or credit, now they become reverse. Earlier Ankur account is credit, now Ankur account is debit. Ankur account is debit. Why, sir? Because he is person, na? So personal account. Personal account. Rule, debit the receiver, credit the giver. Here Ankur is receiver, debit. How much, sir? 1000. How much? 1000. Now actually purchase account earlier debit. Now this time we have to credit it. Have to cancel it now. But instead of using purchase account, which account we are using? Purchase returns account. Of using purchases account, which account we are using? Purchase returns account. So purchase returns account credit. Nominal account. Nominal account. So nominal account gets reduced. So credit. Here everybody 1000. Expense gets reduces. So nominal account credit. Is it clear, students? Yes. This is very important. That's why I have given these transactions one by one in sequence order. Right. Next one. Goods returned by Sukumar. Earlier, we returned goods to Ankur. This time, Sukumar is returning goods to us. Earlier, we sold goods to Sukumar. Now, this time, Sukumar is returning. So, sales returns. Sales returns. Previously, purchase returns. And purchase returns, other name, returns inward. Purchase returns, other name is returns inward. Returns inward. Sorry, returns outward. Returns outward. The other name for purchase returns is returns outward. Is it clear, students? Now look at the next one. Ninth one is sales returns. Now, so earlier, whatever the sales entry we have written, means Sukumar account debit, sales account credit. Now these becomes reverse. These becomes reverse. Simple. Look at. So instead of using sales, what we use? Sales returns. Sales returns account. Sales returns account. Sales returns account. Or we use returns inward account. Returns inward account. Yes or no? Sales returns account or returns inward account. Clear? Next, Sukumar account. Now this time Sukumar is the giver. Sukumar is the giver. Earlier Sukumar is received goods. This time Sukumar is giving goods. Sukumar is giving goods. Okay. Nature of account, tell me. Nature of account. Nature of account. Sales returns. See, income reduces. Income reduces. Sales earlier income na. Now this time reduces. So nominal account debit. Income reduces debit. Expense reduce credit. Income reduce debit. Expense reduce credit. Now Sukumar account, personal account. Kumar account, personal account. Debit the receiver, credit the giver. Credit. How much? 500. How much amount? 500. Is it clear, students? That's it. Next one. Paid rent 5000. We have paid rent. Rent is expense. Rent is expense. Rent is expense. So rent account we create. Rent is expense. So rent account we create. Rent paid means what? Cash paid. So what is giving aspect? Cash. What is giving aspect? Cash. Now rent is nominal account. Rent is nominal account. Cash is real account. Nominal account, expense debit or loss debit. Cash account. What asset? Asset comes in debit. Asset goes out credit. So accordingly, we debit rent account. How much rent paid? 5,000. Cash goes out credit. Cash goes out credit 5,000. Yes or no, students? Next one, 11th one. Paid salaries to staff 2,000. We have paid salaries to staff. Okay, now salary to the staff is expense for us. So we create salaries account. We create a new account called salaries account. Why you are paying amount to staff salary? That's why we are creating salary account. Salary is paid nothing but cash paid. Salary is paid nothing but cash paid. Salary is expense. Expense means nominal account. Salary is expense. So nominal account. Cash is asset real account. Cash is asset real account. Now rule nominal account debit all expenses and losses. Real account rule credit what asset goes out. Credit. At this point of time, you are in a position that whatever the entry they give you are in a position that you analyze like this. After analyzing, recording the entry is nothing. Simply drawing the format and writing entries. Is it clear, students? How much? 2,000. Now, all the transactions are we have analyzed. All the transactions we have analyzed like this. Yes or no, students? Is problem number in analysis of transaction. Which approach? By which approach? Traditional approach. By which approach? Traditional approach. Okay. Make a record of this. The next problems onwards, or from the next problems onwards, you need not to analyze like this. If you want for your practice, you can analyze like this. Otherwise, we simply start recording entries. Otherwise, we simply start recording entries. Now, go to journal format. Go to journal format. Quickly draw the journal format. Problem number. So try to maintain notes in a neat manner because this will help you in the time of exams. Now, how to write the heading? Writing heading is very important, students. Writing heading is very important. So, who is the owner of business? Mr. Amar. Mr. Amar is the owner of business. Now, how we write the heading is in the books of Amar. Because as a chartered accountant, we have so many clients. Have so many clients. So, in whose books you are writing the entries or whose books you are maintaining? Because we should not mix Amar transactions, we should not mix with Vimal, and Vimal transaction we should not mix with Varma. Yes or no, students? So, Amar business transactions we have to record in the Amar books only. Varma business transactions we should record in Varma books only. So, we have to maintain separate books for each client, each business. Here, that's why to differentiate this, have to write the heading like this. In the books of Amar, what you are going to do? You are going to write journal entries, or simply you can write journal, or you may also write heading in a different manner. What is that? Journal entries in the books of Amar. You may also write journal entries in the books of Amar. Both are Both gives same meaning. Now draw the format. Draw the format. Journal format. 5 column format na. Draw it. 5 column format. So use pencil, scale, erasers, all those things, and record the end or draw the format. And don't forget to write column names also. Tell me how many columns format it is? 5 column format. 5 column format. First column, what is the first column name? Date. Next column, particulars. Next column, particulars. Next column, just write down LF, ledger folio. LF means ledger folio. We discuss this ledger folio in the next chapter, that is ledger chapter. Next one, debit amount. Next one, credit amount. Debit amount and credit amount. This is the heading and this is the format. Be careful while drawing the format. Here, now look at the first analysis, first transaction analysis. Which account debit, which account credit? Cash account debit, capital account credit. Write down the same. Date of transaction. What is the date of transaction? 2022 December 1st. Yes or no? Right. So cash account debit. How much? 4 lakhs to capital account. 4 lakhs. Yes or no, students? And don't forget to write the narration. For the narration, we write being started business. So, narration is nothing but brief explanation about the entry. Brief explanation about the entry so that you can write in your own words also. This narration may be written by person to person differently, no problem. Okay, but this narration should convey the above entry. Narration should convey the above entry. Don't forget. Next one. Next one. Second one. Second one. Observe. Get. Next transaction is December 5th. December 5th. Purchased furniture and paid by cash. Just make a correction. Paid by cash 25,000. So, how we record the entry? December 5th. Now, this time you need not to write the year again because already year we have written at the top. Month also we have written at the top. Now we change the year only when year is changed, and we change the month only when month is changed. But these transactions happened in the same month now. And don't forget, we should write the entries in a chronological order. That means date by date. Now tell me, furniture account debit. Account debit, furniture account debit. How much worth of furniture purchased? 25,000. 2. Credit is cash account. 25,000. And what is the narration we write? Being furniture purchased. Simple. Being furniture purchased. That's it. Over. Next transaction. 8th date. Purchased goods 1,50,000. What's the entry we record? Purchases account debit. Account debit. Purchases account debit. How much? 1 lakh to cash account. 1,50,000 being goods purchased. Being goods purchased. Yes or no, students? Yes. So you do one thing. When you are while you are writing, na, just read and write. Just read the entry and write so that it will become habituated. Okay, next one. 10th date. Freight paid to bring the goods 1,000 rupees. Freight paid to bring the goods. 10th date. This also write down 8th date, actually it has given by mistake. Is also 8th date. Make a correction. 8th date. Okay. Now, freight account debit. Freight account debit. Freight account debit. How much freight paid? 1,000 to cash account. To cash account 1,000. What is the narration we write? Simple. Being freight paid. That's it. Being freight paid. That's it. Over. Simple narration. Narration is nothing but brief explanation about the transaction or entry. Right. Next one, 10th date. Is sold goods for 1 lakh now. So entry cash account to debit. To just see the analysis, because analysis part already we have recorded na, we have written na, so you just observe. So cash account to debit to sales account. Cash account to debit to sales account. What is the narration we write? Being goods sold. Being goods sold. So if you want, you can write this also. Being goods sold for cash. This also you can write. Or simply you can write being goods sold. No problem at all. Nothing. Next one. Next one. 12th date. Purchased goods from Ankur 50,000. 12th date. Purchased goods from Ankur 50,000. What is the entry we record? Here we simply write 12th date and purchases account debit na. So purchases account debit 50,000. Purchase account debit 50,000 to Ankur account. To Ankur account 50,000 being goods purchased on credit. You can write like this also. Problem. Being goods purchased on credit. Being goods purchased on credit. Is it clear, students? Next one. Next. 14th date. Sold goods to Sukumar 25,000. Sold goods to Sukumar 25,000. What is the entry we record? 15th date. Sukumar account debit na. To just observe the analysis. Sukumar account debit 25,000 to sales account 25,000. Yes or no, students? What is the narration we can write? Being goods sold on credit. Being goods sold on credit. This is what we write. That's it. Next one. 15th date. Goods returned to Ankur 1,000 rupees. Goods returned to Ankur 1,000 rupees. Which account we debited? Ankur account. So 15th date. 14th date, this one is 14th date, and next one 15th date. So Ankur account debit 1000 to which account we credited? Observe students, purchase returns account. And what is the other name for purchase returns? Returns outward account. Or no? 1000 being goods returned. Goods returned to Ankur. Yes or no, students? Understood why we are drawing a line? To differentiate between two entries. Otherwise, they become clumsy. Yes or no? Next one. Goods returned by Sukumar 500. 15th date. Goods returned by Sukumar 500. So earlier, what is the entry we have written? Sales returns account debit. In the analysis, which account is debited? Sales returns account debit. What is the other name for sales returns? Returns inward account. Returns inward means goods coming into business. Returns in the form of returns. Returns outward means goods are going out from the business in the form of returns. To Sukumar account. To Sukumar account 500 being goods returned by goods returned by Kumar. Goods returned by Kumar. Yes or no, students? Next one. 30th date, we have paid rent. So at that time, which account we have debited? Rent account debit. In our analysis, rent account debited now. So how much? 5,000. To which account credit? Cash account. So 5,000. So for this problem now, you just write the analysis part plus entries part. From the next problem onwards, we just write the entries part. Start writing directly from entries part. Okay, so that we can save some time. For your understanding, if you want, you can write analysis part for every problem. For every problem, you can write analysis part. No problem at all. Being rent paid. Being rent paid. Yes or no, students? Next one. Next one. Observe. Next one and last one. 31st. Paid salaries to staff 2000. So 31st. Which account we have debited? Salaries account. Salaries account debit. How much? 2000. To cash account 2000. Yes or no, students? So being salaries paid. That's it. This is our problem. Observe carefully. Yes or no, students? Yes. So try to make a note of it. After completion of that, please go through the problem once again, because this is the basic problem, and that to those students who are from MPC and BPC background, they need more one time practice. Just first step, read the problem. Next step, analysis part. Next step, this one, entries part. Is it clear, students? Yes. Anyway, you have the solutions. We provide solutions also, but it is better to write with handwriting practice, because it becomes practice for us. Yes or no, students? Yes. So that's it for this class. In the next class, we discuss more problems. And before that, We also discussed this concept of simple entry versus compound entry. After that, we discuss banking transaction. This concept is very, very important to students. Banking transactions. Yes or no, students? Yes. So, we meet again in the next class. Till then, bye bye, everybody.